Adani-Hindenburg, LIC, State Bank of India, Adani FPO, stock market crash, Mauritius, Cayman Islands. These names have been all over the headlines of almost every news channel and digital media you can stumble upon. So, what exactly is happening in India? Should you be worried? Let's find out. This is Salman from Trade Room, and I'm going to take you to the breaking news. Adani, how the billionaire's empire lost $100 million in few days. Reserve Bank of India asks Indian banks for details of exposures to Adani Group. Adani Enterprises cancels FPO to refund investors. Adani's Hindenburg's impact and LIC's mid-cap down over rupees 65,400 crores in 5 sessions. Now is the time for the actual story. 7 of the Adani Group's publicly listed companies have lost between 35 to 60% of the share value ever since the US-based firm Hindenburg published a shocking report on Jan 25, 2023. The report alleged stock manipulation by the Adani Group and raised concerns about the high debt and inflated valuations. So, who is Hindenburg and why is this important? Hindenburg Research LLC is an investment research firm based in New York City with a focus on activist short selling. Founded by Nathan Anderson in 2017, this company has emerged as a forensic financial research firm which analyzes equity, credit, and derivatives. It has a track record of finding some of the major corporate wrongdoings, like placing bets against companies, among other key matters. In other words, this company short sells the stock of a company through its foolproof research reports. Now, let's break down this concept of short selling. Short selling is basically a way to bet on the price of a stock that is falling by borrowing it, selling it, and then buying it back later. You can identify such stocks with the difference between the sale price and the purchase price that represents the profit or loss made on the trade. Here's an example. Imagine a stock that is priced at rupees 50 per share. If you were to borrow 100 shares and sell them for rupees 5,000, and then later when the stock price drops to 25 rupees per share, you could buy back those 100 shares for rupees 2,500 and return them to the broker. The result would be an easy profit of rupees 2,500. So what does this have to do with the Hindenburg's report? Let's find out by taking a closer look into the key highlights of this report. Number 1. Overvalued shares. The price of some of the stocks of companies listed in the Adani Group are valued as much as 140 times higher than its actual value, which is a way too high for the industry standards. Number 2. Debt-fueled business. 5 out of 7 key listed companies have reported that the total amount of current assets is less than the total number of current liabilities in those companies. This is a clear red flag because it simply means that companies are highly unlikely to have adequate assets that can pay off their liabilities in the short run. Number 3. Promoters pledging their stocks. The promoters of Adani's companies have pledged their shares as collaterals for additional debt. This means that they are not only increasing the debt obligations but also attracting additional risk. This is because when the share price of the company falls, the value of the pledged shares will decrease and give a clear warning sign to investors. Sounds fishy, right? Wait until you hear more on what the report has to claim. Number 4. Doubts regarding the management team. The report claims that some members of the management have a questionable past, which includes allegations of frauds, duty evasions, scams, etc. Number 5. Excess promoter control of shares. The report suggests that a large portion of public shares in these companies may be controlled by shell companies from Mauritius and Cayman Islands who have ties to the Adani Group. This could mean that, in practice, these companies may not meet the minimum public shareholding requirements set by the Securities and Exchange Board of India, which is the SEBI. This exposes the companies to a high risk of being delisted because of non-compliance with SEBI mandates, which usually results in penalties or even delisting from the stock exchange. Number 6. Pumped up demand. The report also claims the involvement of a noted stock manipulator such as Ketan Parekh in this potential market manipulation that may have happened by inflating the stock price. Number 7. Inadequate complaints. The report further claims that one of the independent auditors hired to audit Adani Enterprises and Adani Total Gas seems to be too small a company for them. Apparently, it comprises of professionals that are too young to handle the auditing of such a large array of companies. These serious claims called for a response. Adani did respond with a 413 pages report and called this allegation as a calculated attack on India, the independence, integrity and quality of Indian institutions along with the growth story and ambition of India. Hindenburg didn't sit back either. They gave a reply to the detailed response of Adani's report saying that India's future becomes debatable because of companies like the Adani Group who have draped themselves in Indian flag while looting the nation. The reply also read like, a fraud is a fraud even when it's perpetrated by one of the wealthiest men in the world. Adani's largest single non-promoter investor LIC has also lost over 64,500 crores. While it is believed that the Adani's group's valuation saw a hike since the investment from LIC, the group has pledged these overvalued shares to get loans from the public banks like State Bank of India and Punjab National Bank. Considering the seriousness of the current situation, Reserve Bank of India on Feb 2nd asked the banks to share their exposure to the Adani group of companies. It was later revealed that the State Bank of India has given a loan of about 21,000 crores, while that of Punjab National Bank has lent close to about 7,000 crores. Now that the familiar names have come in, should you be worried? The answer is yes. Even if you are not a share market retail investor, yes, you should be worried. Wondering why? This is because the money invested in the Adani group of companies by the LIC and the banks we just mentioned is technically your money. This includes your health and term insurance money, your bank deposits in these bank, state and central government employees pension funds in the LIC, and so many other things that connect to the common population. So if this situation persists and the valuation of the company keeps dropping, this could just become the worst ever catastrophic downfall in the Indian economy. In order to fix this, the government will be pushed to increase the price of fuel and gas along with the cost of essential supplies to a level that would hurt the common people like you and me. Do you agree with me? Let me know your thoughts in the comment section below. Share this video with your friends and help us spread the word. Until the next news pops up, see you all.